Kitco News special coverage of Masari's annual Mainnet Summit is brought to you by Oasis Pro.
Whether you love it, hate it, or are undecided, there's no disputing the ubiquity and clout that Bitcoin currently enjoys within the digital asset sector. But widen that search out to include tokenization and the growth of blockchain tech more broadly. And my next guest says we're on the cusp of meaningful new use cases and widespread adoption. I'm Matt Nesto for Kitco News. I'm talking about here at the Mainnet Summit in New York, Paul Brody. He is EY's global blockchain leader in from San Fran. Great to see you, Paul. Thanks for coming on.
Thanks for having me.
So let's talk about this broadening out in these new use cases now. What are the most exciting blockchain use cases you're seeing right now, maybe being talked about at a conference like this, both on the government side and sort of the business enterprise side?
So this conference especially tends to be quite financially focused. And so there's a lot of focus right now on the state of the regulatory environment and what we can or cannot do, especially here in the US market. And I would say certainly finance is important, but one of the thesis, the kind of core thesis that I've been operating on at EY and that we've been thinking about is this idea that fundamentally blockchain is actually the perfect platform for pretty much all business-to-business use cases, right? If you think about any business-to-business transaction, they kind of boil down to something very simple. I have money, you have stuff, and we're exchanging my money for your stuff.
A payment.
Right, under the terms of an agreement. Well, we can very nicely represent the money and the stuff as digital tokens, and the agreement, the rules of our agreement, can be written into a smart contract. And so it's the perfect mechanism for managing, automating, and scaling up business-to-business transactions. And people are they're very focused on regulatory requirements, but the truth is you don't need any regulatory permission to say, manage your inventory, track your carbon output, manage programs or projects, process your procurement process. Like all of these industrial business use cases work incredibly well on blockchain and are starting to emerge. And there's been and I'll talk about this when we'll come to it, but there's a reason why we haven't seen them really scale yet and why we're just about to see them start scaling.
Yeah, and just so I'm hearing you correctly, and you're saying that all those industrial B2B kind of cases don't have that ugly kind of regulatory headwind that everybody's kind of griping about here,
Exactly.
Especially domestically.
Exactly.
Wow. All right, let's talk about these exciting. Where is it hot? Where is it not?
So where it's hottest is what we've just been through. It's worth looking at the history. So we've just been through a really difficult process where lots and lots of companies got excited about crypto and blockchain, and they got excited about all the use cases, and then they tried to do them in the wrong way. They tried to do them on permissioned private blockchains, but those don't really work. Permissioned private blockchains are these centralized, decentralized ledgers. And in the end, what happened was all the participants in these centralized ecosystems ended up arguing with each other instead of just getting on with the work. The thing that was missing, the big ingredient that was missing from public blockchains that we've now really figured out is privacy. Enterprises, tokens are a really great way to manage, say, inventory, right? You can manage a token, you can keep track of it, you can move it around. But if you don't have privacy, your competition is going to see how much you have and where you're moving it. And so the big breakthrough that we've been waiting for and that I feel like we really have finally achieved is the ability to have secure private transactions on public blockchains. And that's why we're about to enter this new era of real adoption and not like fake pilot programs on private blockchains.
Is real adoption related to the real world asset tokenization? Are we going there? Like, I think tokenization, I'm sorry, but I'm still thinking the crazy NFT things that were the trailblazers, that it introduced many to that category. But RWA, real world assets, are being tokenized or are poised to be, if I understand it, in scale.
So a lot of the people here, again, there was also a real world asset summit this week, right? A lot of people, when they talk about RWAs, they really mean like real estate, bonds, things like that. And those are more financial assets, and they're great. But when I think about RWAs, I'm thinking about industrial assets, machinery, capital equipment, inventory. And in those cases, the beauty of tokenization is, and I can't claim credit for this great analogy. Tokenization does for like business assets what shipping containers did for logistics. They create, even though you have all these different kinds of assets inside of a shipping container, you can have this standard way of handling them, and it really scaled global trade. Tokenization allows you to take almost any kind of business asset, a paper cup, a piece of pizza, a package of medicine, a bottle of beer, and package it in such a way that it can be digitally transacted, managed, purchased, sold, moved in a way that's extremely efficient and very disciplined.
See, this kind of dovetails into a question I was going to ask you later, but it's why a company like EY, that's, core business is audit and tax, is interested in a sort of efficiency-driven, kind of consultative business. I'm guessing.
You're absolutely right, and it's very interesting. If you look at the history of how enterprises organize and run, in the 1990s and the early 2000s, we went through this enormous time period where huge amounts of money were spent by companies in something called ERP, Enterprise Resource Planning. And it was basically a set of software tools to manage inside the company to connect up business process and data. Well, the problem with ERP, the biggest challenge with ERP was that really today, most companies and most of the things that we buy are actually made by many, many companies. And the big challenge was companies spent all this time and energy building really cool stuff internally, and then none of it worked externally. And with blockchains, what we can do is all that cool stuff we could do, managing process and data in a consistent way inside the company, you can now extend beyond the company boundaries. So we really believe the next wave of B2B transformation, the next wave of just enterprise transformation, is about making your external relationships as digitally sophisticated as your internal business process.
Now, maybe I was distracted by your cool shirt, but I think I overheard you as like being pretty partial to Ether, as I think it's the next, becoming the dominant blockchain, and maybe displacing some competitors in doing so. Did I get that right? Am I distracted?
No, you absolutely got that right. And a lot of times I'm accused of being like an ETH maxi, and that's not really sort of fair or accurate. I look at Ethereum from a technology perspective. Before I came to EY, I worked 15 years in a tech business, and technology industries love standards. And by the way, that doesn't mean they pick the best standard or the best technology, right? But they love standards and they love scaling around the standard. And what I observe here is that we're experiencing the same thing with Ethereum as a network infrastructure as we did with like TCP/IP, with desktop operating systems, mainframe operating systems. You tend to end up on one major platform with some integrated tools. And so I think, like it or not, perfect or imperfect, the future of the programmable smart contract ecosystem is the Ethereum blockchain and all of its associated layer 2 networks.
So I'm thinking, like, when you talk about technologies that get embraced despite like the what's it, Blu-ray video, and then you see that and it ends badly. I mean, are those kind of analogies, are they relevant to these early days where you jokingly say, hey, I'm the ETH guy, but these things come and go. We see regulatory bodies come out on a Monday and announce, hey, these guys are not on our list anymore. Things change quickly. I mean, how do you kind of hold hands and keep people in the boat on these early days?
So first of all, I'm a really big fan of technology history, and I talk a lot to people about like the history of railroads, the history of computer systems, the history of networks. There's a really amazing article I recommend you go read sometime. It's called The Netheads versus the Bellheads. And so it was written in Wired. You can find it online today. And it was about the early days of TCP/IP and the huge battles that took place on different networking standards and how to really scale the internet. And what was amazing is it was very similar back then. Like, the Bell companies were much more interested in protecting their circuit switch software business and their traditional phone company business. And there were all these startups had this cool idea for like internet protocol and token and packetization. And one of the things that I remind a lot of our corporate clients is there's nothing new going on here. The same thing happened with the internet. And by the way, just like Ethereum, the internet is a public, permissionless, decentralized network. And on top of that public, permissionless, decentralized network, we built privacy, security, regulatory compliance. It works just fine, and we will repeat that process again today.
I open up with a thing about love it, hate it, or somewhere in between on Bitcoin. Where do you fall on Bitcoin? How relevant is it in your day-to-day work?
So Bitcoin is carved out a space as the digital gold. And for finance people, Bitcoin is very important. It's the most important digital asset. But when it comes to building business applications, programmable solutions, DeFi, Ethereum is a platform. Bitcoin has actually made some progress in terms of supporting, tokenization, NFTs, programmability. But at the end of the day, I think it's a very, very distant, not even second, to the programmability of the Ethereum ecosystem. And I think my own personal guess is that based on history, we are too far down the road of EVM-compatible ecosystems that it's likely that Bitcoin would suddenly reassert dominance as not only a digital asset, but also a programming ecosystem.
Now, I had the Solana chief strategist on this week, and they were saying similar things, but maybe even stepping over Ether as well. And so it made me think of just the battle for dominance. It's in the space and how early it is. And Bitcoin as a, sort of early tech, how it's being updated and different features being added to different platforms and such.
So it's really interesting when people talk about its early days. This is actually one of my favorite topics. If you go look at the history of technology, what's interesting is that there's different types of early and late. So, for example, early in the era of adoption is actually late in the development of standards and core technology. So what happens—
That's almost like a fortune cookie. I gotta get my head around that.
So what happens is, before you get widespread adoption, somebody has to win a core technology standards battle. We're more than a decade into the smart contract kind of technology ecosystem world. I think we already know the winner. It's very interesting. If you go back to the history of the PC business, what you saw was that as early as the early 1990s, Windows was the winning dominant platform. People continued to launch new PC operating systems. And by the way, they were better, right? But being the best isn't necessarily the way you win these things. What you win is with the largest developer ecosystem, the largest market liquidity, the largest number of users, and by almost all of those standards, including transaction volume, users, applications, ETH isn't just ahead, it's absolutely dominant. And there's very few cases, it does happen from time to time, but there's not many cases where this far into a tech ecosystem, you get a complete upset.
So when you're not on a plane or talking to groups, you're in San Francisco. But I guess my point is the sort of the global nuances you see. You're just back from Europe, I think London you said. I don't think it was long that you were at Singapore. And so talk to me about what you're seeing overseas, Asia, Europe versus domestically.
So a couple of—
And I'm sorry to add, and why that matters.
Why it matters. Well, a couple of interesting things. So first of all, one of the things that's kind of interesting is, in many ways, for a long time, our European clients have been at the cutting edge of the non-financial use cases. We have more food, product, and asset traceability clients running on public Ethereum in Europe than anywhere else in the world. And it's because European consumers really value knowing the origin of their products. And so that's why we do cheese, wine, all kinds of foods, and also medicine in Europe is very, very successful for traceability. And European companies have been quite comfortable pursuing the cutting edge there. So that's been very interesting. US companies have tended to do bigger projects with more scale, but fewer of them. In the financial space, we are coming up on a really big divergence. Historically, the US not just the world's biggest capital market, but it's also been the most kind of risk comfortable. And so this is why all these big US investors have been into these tokens, DeFi, Bitcoin, sooner than the rest of the world. Like the US has been always by far ahead on the technology development and the risk comfort. What's happening now is because of the very high level of regulatory uncertainty, markets in Europe and Asia are actually growing faster, although from a smaller base. And the regulatory platform, especially MiCA in the European Union, is going to bring in, standardize, and really unleash a lot of investment activity. If you think about the world of kind of crypto and blockchain, it's, I don't know, $1 trillion to $2 trillion. There's $200 trillion in the financial system, and none of that's gonna move from the legacy financial system into the world of blockchain and crypto until you have regulatory compliance. And in that respect, European and Asian countries are doing a faster job of laying out those rules. Now, the rules are not going to be perfect. And if you listen to people who really have gone through the rules, there's absolutely some shortcomings. But I think in general, what we're seeing is a concerted effort to write rules that people can use and to grow the industry.
Who or what needs to happen, or by what company or entity large, to send a message to really, break the dam, so to speak? What's your dream little development in the short term that would really be yeah, we got this. We're going.
So the dream to really undam this whole process would be bipartisan legislation here in the US that lays out some of the rules and creates kind of a good regulatory structure. To be fair, we have a decentralized regulatory environment. We have a relatively complex process. We're going into an election year. That's probably not a realistic hope. My expectation is that we will see a lot of excitement and activity around MiCA, especially in the EU next year. And, the world is competitive. And so my hope is that, particularly from the US market side, they will look at what's going on in Europe and Asia and say, you know what, we should do something because it's becoming a globally competitive technology platform issue. So that's my hope. But, I don't have any control over that process. And, America is quite a large but fundamentally decentralized regulatory structure. So I don't think it's fair to expect a really quick resolution to those kinds of questions.
I would think that multinational companies that have big operations in Europe and Asia, where they're doing well with this sort of thing, will be influential in saying we really should be doing this in our biggest, most important market.
I hope that they're saying that, right? I don't have any insight into that process, but I remain generally confident that just like we have with every other, the US had we did a great job with the internet, right? I am confident that we will get these hiccups. We will look back in 10 or 20 years and we'll be like, yeah, there was a little bit of turbulence. That's normal for new industries. We forget how much angst there was over the internet, over regulatory compliance, over encryption. We used to prohibit encryption on the internet, and we used to prohibit the export of encryption systems, but you can't have e-commerce without privacy, and we worked our way through that as well. So I would say I remain fundamentally quite optimistic about the medium-term prospect for good resolution.
Awesome. Anything we overlooked, or any thoughts or observations on your mind right now that you feel are, kind of pertinent, pressing, that we didn't bring up? That's called a bounce pass.
And I think, you asked the great questions. I got to talk about the things I care so much about. Maybe one last thing, which is, if you want to know more about these things, I actually wrote a book. It's called Ethereum for Business, and it is all about the use cases, the practical business applications for blockchain technology in the enterprise.
Awesome. Paul Brody, global blockchain leader at EY. Thanks. Appreciate you coming on and sharing some time with us.
My pleasure. Thanks for having me.
For Kitco News, I'm Matt Nesto.
Kitco News special coverage of Messari's annual Mainnet Summit is brought to you by Oasis Pro.